Many of you that are here probably have attended our other seminars, and that's great that you've been able to do that. And in the past, you have been listening to me speak the whole time. Today, we'd like you to get to know some of the other JAK team members here. You know, by age, I am clearly the senior CPA at JAK. But we actually have 3 of our people that have actually attained the level or earned the level of senior CPAs here at JAK, and they'll be doing most of the presenting as we go along. So the 3 seniors you'll be hearing from are, in the order of appearance, are Joann Wolfenberg, Ethan Cummings, and Kyle Sturgeon. And there's wonderful pictures of them. They're great people here. Glad to have them on our team. And I'm sure you'll be happy to hear from them as we go along. So Joann, do you want to get it started?
All right, guys, ready to go? Can you guys hear me? Give me a thumbs up, Kyle or Ethan, just so I can make sure. Okay. All right, so I'm just going to be talking through page 1, just giving you a general overview and talking about some of these non-payroll costs, and just you guys more comfortable with filling out the form. If you've had some initial questions, hopefully we cover those today. Otherwise, feel free to message us and we'll try and get those answered for you. Sorry, there's just a little lag here as we're moving on. Okay, so talking about just the general information, that's just the top of this form here. A few things to note is that there is an easy form. Kyle's going to talk about that later to see if you're eligible to fill that out. And just need basic information, your legal name, your business address, and you'll want to have the original loan application that you filled out right next to you because you want it to match up to that original application. And then you're going to fill out the PPP loan number, the amount you had. If you had an idle advance, you'll want to include that there. A few other things to note too is you'll see in the upper right-hand side, it said that this form expired on the 31st of October. The SBA has ruled that you can still use this form. There's a new application coming, but in the meantime, this form is fine. We've had a few questions about what the number of employees to use at the time of the loan application. You want to use the number of employees that you actually gave paychecks to. So don't worry about full-time equivalents. FTEs don't apply here. So you just put down the number of employees that you actually had.
Oh, that's going to be hard.
Under this general section is your payroll schedule. So just include your payroll frequency, whether it's weekly, bi-weekly, and then you'll include the length, your actual covered period, when it started to when it ended, covered or alternative period, and then right below this would be your line 1 payroll costs, and that flows from the Schedule A that Ethan will be talking about later. So the covered period, the default is 24-week period. It starts from the first day you received your proceeds, ends after that 24 weeks. There is an option to use an 8-week period if you received the loan prior to June 5th. Most people probably won't use this, but if you are using it, you'll probably want to pay attention to some of these non-payroll costs because you'll probably include them on your forgiveness form to get you to the full loan amount you got. And then the covered period will not be allowed to extend beyond December 31st, 2020. So if you got the PPP loan a little bit later, just be aware of that as you're filling out this form so you don't include some expenses that wouldn't be allowed. And keep in mind too, the 24-week period being used, payroll likely is going to cover all of these, or at least most of the costs needed to apply for forgiveness. So these non-payroll costs, you probably aren't even going to have to include on your application. You only need to include on your application the amount of costs that get you up to your loan amount. So you don't need to include a full 24 weeks of payroll if you're at the 12-week mark and you've already reached your loan amount and your loan's been used up. So just keep that in mind as you're filling out the form as well. So we've got a lot of questions about expenses if you base them on a cash or accrual basis. The answer is kind of both. Basically, most costs are going to be eligible if they were incurred before or paid after your covered period. Just make sure you're not doubling up on expenses and counting something twice when you fill out the application. So since we've had so many questions, I was just going to go through some examples about what would be eligible or not. So this first example, a borrower's 24-week covered period runs from April 20th through October 4th. On May 4th, the borrower receives its electricity bill for April. The borrower pays its April electricity bill in May. So even though part of the electricity costs were incurred before the covered period, these electricity costs are eligible because they were paid in the covered period. So then on the flip side, using the same covered period, if you received your electricity bill on October 6th, but it's the September electricity bill and you pay that bill October 16th, technically your covered period is already over, but since the electricity bill was incurred for September, which was over the covered period, it's incurred, so you paid it, even though you paid it later, it would be an eligible expense to include on your loan. So then we're going to kind of dig into these lines. Line 1, Ethan's going to explain, so I'll skip over that. We're going to start with line 2, which is your mortgage interest, and then go through the other non-payroll costs like rent and utilities. So line 2 is your business mortgage interest payments. You only include on this line your interest portion of your mortgage. You can't prepay any interest on this. And then do not include on your application any principals, taxes, other fees on there. And one thing to focus on too is make sure that all these loans have to have existed before February 15th, 2020. And they're going to verify that when you send in your documents too. So for each of these non-payroll costs, there's a lot of documents you have to include, and a lot of them are very similar across the board. So just something to keep in mind as you're pulling everything together. For your mortgage interest, you're going to need copies of your amortization schedules, receipts or canceled checks verifying eligible payment, and then bank account statements from February 2020, then through the covered period and 1 month after. So that's where they want in the February 2020 bank account statement, they'll verify that the expense was in effect before the 15th. So then moving on to line 3, this is your business rent or lease payments. You include here just total building rents or your total building lease payment. Again, the lease must have been in effect prior to February 15th. And then if the lease was renewed after the 15th and canceled before the 15th, the expenses will still be eligible. You're just going to have to include your renewed lease agreement in there. And then one thing to keep in mind is one-time rentals are not going to be eligible on this forgiveness form. An example would be if you hired a moving truck to help you move some stuff from your business to your home office, that expense would not be eligible on this form. And there are some limits on rent and interest paid to related parties. Rents paid to a related party are only forgivable up to the extent of interest paid on the mortgage secured by the property. So if the related party does not have a mortgage, then no rent is going to be eligible for forgiveness, so you wouldn't have anything to include on the form. And then something else to keep in mind is that personal space is not eligible if you normally lived in the space and now you're using it as like a home office and charging rent. If you didn't charge rent in like 2019 for a home office, you probably can't include it on this form. And you're going to need, again, similar documentation for rent, copies of current lease agreements. If you renewed your lease, you're going to need that as well. Receipts or canceled checks verifying eligible payments, and then those bank account statements for February 2020, covering the covered period, and then 1 month after the covered period. So then moving on to line 4, this is where you'd include business utility payments. This would be heat, electricity, water, trash. And then some of those things you don't think about, like your internet, your phone and cell phone, transportation. And again, these things have to have been in service before February 15th, 2020. So if you got a big cable package after this, because people have been sitting around a little bit more, technically that would not be eligible to include on this forgiveness application. And documents you'll need will be invoices, receipts or canceled checks, those bank account statements covering that period I've already mentioned. And then I'll talk through the certification that you're going to need to fill out that just certifies you submitted all these documents verifying these expenses were eligible. So that's this form. It's page 2, and I kind of highlighted here the section I was referring to. Basically just says you've submitted the required documentation, verifies that payroll costs were in existence prior to February 15th. Same with your mortgage interest, your rent, and your utilities, and they're all valid expenses. So you would initial here, and then you're gonna initial all these other boxes and sign at the bottom, and overall it's just saying you followed all the rules when you're filling out your application. And just kind of a recap of what I've talked through, whether you're using your mortgage interest, rent, utilities, all these have to have been in effect prior to February 15th to be eligible expenses when you're filling out your application. And most, if not all, the expense requirements are going to be met by payroll. So you probably won't even need to include these non-payroll costs. And so now I'm going to throw it over to Todd to see if there's any questions that have come up about this section. And we'll go through those now. Otherwise, Ethan's going to talk about the non-payroll costs.
Well, Joann, I have one question for you, and that
Okay.
is just as a point of clarity. So I know I saw on your slide that the interest that we can use for forgiveness has to be on a building, the
Right.
business building. But I believe the rent could be for the business building, or it could be for equipment you use in your business. Is that correct?
Yes. Yep.
Yeah, so it doesn't have to be just for a building. So remember that. And then some of the related party rules get a little dicey. So you may want to talk to, if you come down to those specific rules, you may want to reach out to Joann or your favorite person that you already work with at JAK, and they can help lead you through it. Nice job, Joann.
Thank you.
Well, Ethan, do you want to help explain to people what's going on with payroll? It is the #1 question I'm getting from clients on PPP. So can you help people get through this?
I sure hope so. So as Joann mentioned, I will be covering the payroll and payroll cost section of the application. And that line 1 item is referencing to this PPP Schedule A. Now for this form, as you can see, it's kind of broken down to a number of different sections. So we're just going to kind of walk through section by section, making sure we kind of understand what goes into each line item and what they're asking, as well as documentation that you'll need for your payroll and payroll costs. So we kind of dive in here. At the top of the page, we start with the first 2 sections, this Table 1 and Table 2, which is where you're going to be reporting the cash compensation and your full-time equivalent calculations for your employees during that covered period. The Table 1 and Table 2 can be found on the page 4 of the application, and we'll look at that in detail and then kind of circle back to these line items on Schedule A to see kind of how all that information from the tables flows into here. So if we go to that page 4, at the top of the page, we start with Table 1. And this is where you're going to report all your employees that you had during that covered period that received compensation that's annualized, and it adds up to $100,000 or less for all pay periods in 2019. And some of the information you're going to need for these employees, you're going to need the name, the employee ID number, which is just the last 4 of their social. We're going to go into detail on how we come up with this cash compensation amount, calculating the average full-time equivalent column, as well as any potential salary or hourly wage reduction for any of these employees. So one thing to note for Table 1, one of our goals for this table is to limit how many employees we actually include in Table 1. And the reason for that is it lowers our potential for any sort of wage reduction for these employees. And the people that you kind of exclude from Table 1 are your owners, anyone self-employed, partners. They'll get included on line 9 of Schedule A. So they have their own little section. They don't get included in Table 1. Other people that you exclude, anyone that was not employed by you in 2019, anyone who made more than $100,000 in 2019, because they'll get moved into Table 2. And anyone that might have received a bonus or commission during 2019, that if you annualize it, it gets over that $100,000 threshold. So as an example, if you had an employee who was paid bi-weekly and one of their payrolls was at $3,850, if you annualize that, it gets you over that $100,000 threshold, and then they get bumped from table 1 down to table 2. So if we look at that cash compensation column, this is any salaries, wages, bonuses, paid leave that you would have paid to your employees during that time. And this is for compensation that's paid or incurred during that cover period. And for the amount that we can actually enter in the cash compensation column, it does have a cap on how much you can actually enter. That's going to be based off of the covered period that you select. So if you select the 8-week covered period, that cap on how much compensation you can add to that table 1 is $15,385, and if you select the 24-week covered period, it's the $46,154. And just to note that owners also have a cap on how much we can claim on that line 9. So for owners, that limit is the $15,385 for the 8 weeks, and for 24-week covered period, that's $28,33. And we'll go into a little bit more detail when we look at line 9 on how we're coming up with that $28,33 cap. So now we move on to the full-time equivalent calculation, and you kind of have one of two choices on how you come up with that full-time equivalent calculation. The first choice, which is kind of the more detailed choice, you look at the average hours per week that those employees worked for that period, and you divide that by 40 hours. And then you round it to the nearest 10th. So say you have an employee that they average about 17 hours per week during that period. You divide that by 40 and you get 0.42. But then we round it to the nearest 10th, so you would enter 0.4 for that employee. Then the maximum that we can actually enter for the full-time equivalent is 1.0. So if you have any employees that consistently work over that 40 hours, say they work the 48 hours in the example, you divide that by 40 and you get 1.2. But the max that we can enter is 1.0, so that's what we would enter for the full-time equivalent. Now the second option, which is the more simplified option to choose, is you just look at any employees that work the 40 hours or more per week, and then you just enter 1.0 for them. And any employees that work less than that 40 hours, you enter 0.5 for those employees. And then just make sure whichever choice you choose to calculate your full-time equivalents, that you're being consistent in that application throughout this application. So if you're calculating for the reference period or your covered period, make sure that you're using the same choice for your calculation. Now, finally, we hit that salary and wage reduction column of table 1. And now this column only needs to be filled out for employees who made less than that $100,000 threshold, but their salary or wages were reduced by more than 25% during the covered period. Now, there are some exceptions to this reduction or ways to get out of it. And to kind of summarize these exceptions, just think, it's not my fault you're not here. And what we mean by that is, if you make a good faith effort, if any employees left, you make a good faith effort to rehire them during the period. If any employees were fired for cause, voluntarily resigned, or requested a reduction in hours, it's not your fault they're not here. So it was their choice, or you didn't really have a choice in the matter. So they fall into the exception line of this wage reduction, and we don't have to worry about that for the reduction. And now for salaried workers, it's a lot easier to be able to tell whether they actually did have a reduction in pay during that period. For hourly workers, if their hourly rate did not change, just the hours they worked changed, and they don't really fall into this wage reduction because they fall in, or it's calculated throughout that full-time equivalent calculation. Their hours fall into that. So we don't want to penalize by having them included in that full-time equivalent calculation as well as in this. So if you have any employees that don't fall into those exceptions, then within the instructions, there's kind of a step-by-step calculation of how we get to this wage reduction. We could spend a lot of time kind of walking through this, but I guess if you do have any issues with filling this out, feel free to reach out to one of us and we'd be happy to kind of walk through each step and figure out that calculation with you. So now that we've kind of filled out table 1, now we move to table 2. Now this is for all employees that don't really qualify in table 1, which are anyone that have annualized compensation over that $100,000 threshold for 2019. And as you can see, the reason that we want to kind of get more into this table 2 versus table 1 is that we don't have to worry about that salary or wage reduction calculation. We just have to worry about the cash compensation and that average full-time equivalent for each of these employees, which the calculation is the same as in table 1. So now that we've kind of filled out those tables, we can kind of circle back to the Schedule A. And as you can see, those lines 1 through 3 correspond to that table 1. And we're just going to populate with what we come for a total in that box 1, 2, and 3 of table 1. And then same for that table 2 totals, boxes 4 and 5, we'll add to lines 4 and 5 of the Schedule A. Now, once we've kind of gotten through that section, we move down the schedule and we run into our payroll costs and our compensation for owners. Now, the payroll costs, this is mainly going to be any employer contributions for employee health insurance, retirement contributions, or the state and local taxes paid by the employer. So again, what's included in those payroll costs are your health benefits, excluding any pre-tax or after-tax contributions by employees. Retirement plan contributions, again, we're excluding any contributions by the employees, and then the state and local taxes paid. And then what payroll costs are excluded from this section? Obviously, it's your compensation, because we already factored that into our calculations in table 1 and 2 above. Any wages paid employees living outside the US, as well as we're excluding the payroll taxes, because when we look at that cash compensation, we look at it gross, not net of withholdings. So now we move down to that line 9, which is the owner's compensation. And again, as I noted earlier, there is going to be a cap on the maximum that we can actually claim for the owner compensation. 8 weeks, that's that $15,385. And for the 24-week covered period, the maximum you can claim is the $28,033. And how we get to that is it's 2.5 months of the wages at that $100,000 threshold. And the reason why they cap it at that is that they don't want any owners to have more forgiveness than what they initially applied for. And then for owners, that cap may be reduced more depending on what the maximum compensation was paid for in 3 different kind of scenarios. So you'd look at the cap would be the lower of either the actual payroll paid during that covered period. If it's less than that $28,033, you'd have to use that lower amount. Then the next threshold is at $28,033 or the $15,385 for the 8-week period. And then your final is if you prorate your 2019 compensation and it ends up being less than a $28,033. And the reason for that is that they don't want owner employees to be given any bonuses during that period just to kind of meet that cap if they didn't receive it in 2019. And then what about partners and sole proprietors? For them, we're going to be looking at the 2019 income that they were received on their Schedule C or the K1. So you're just looking at that so that you kind of eliminate any sort of need for the 2020 cutoff accounting. And then for that income, we're going to be excluding any sort of health benefits or the profit sharing. Now that we kind of come up with those totals, we kind of come back to Schedule A, and as you can see, lines 6 through 8, it's going to be those payroll costs that we discussed, and then the owner compensation is going to flow through on that line 9. And once we've kind of calculated everything on there, we come down that line 10, which is your total payroll costs, which is just kind of summing up everything that we've calculated already on Schedule A, and that total flows onto line 1 of your page 1 of your application. So if we go back to that page 1 of your application, there's also line 5 and 7 that's referenced to Schedule A, and that's going to be your full-time equivalent calculation that we did in Table 1, which is on line 3. And then also there's a line 7, which is looking at the full-time equivalent reduction from line 13 of Schedule A. We'll actually look at that right now. So this relates to the full-time equivalent reduction calculation, and there is some safe harbors that you can meet to not have to have any sort of reduction related to this. And the first of those safe harbors is if you didn't have any reductions in employees. If everyone stayed the same, then you don't really have to worry about the reduction. So you check that box and you enter 1.0 line 13, and then that carries to page 1. Your safe harbor 1 is basically if you can show that you were unable to operate at the same level of business as before February 15th during this covered period due to having to adhere to the COVID-19 rules and restrictions, then you qualify for that safe harbor 1 and you check the box and then you enter on line 13. In safe harbor 2, it's kind of your final safe harbor for this, and they actually have a worksheet or a section on the Schedule A worksheet to calculate that. And if we go to that, it just basically you're showing if you had a reduction in your full-time equivalents during that time, were you able to make that up by the earlier of December 31st or the date of this application? If you're able to make that full-time equivalent up by then you kind of qualify for the safe harbor 2. And then you just have to enter 1.0 on line 13. Again, just summarizing that, if your full-time equivalent levels were reduced, and then you were able to make that up to the February 15th levels by the end of the year, then you kind of qualify for that safe harbor 2. But if you don't qualify for any of those safe harbors, then we look at line 11 and 12 of this to figure out what should be on that line 13. And really all you look at that is your average full-time equivalents during the chosen reference period and take that against the full-time equivalents that we calculated in Table 1 and Table 2 above. And you divide those to get to your reduction on line 13, and then that flows to your page 1. And finally, kind of what's some of the documentation that you need to submit for this. For your payroll, it's really anything to kind of substantiate how you're coming up with those cash compensation amounts and those payroll costs. So it could be a bank account statement. Banks really like to see the third-party payroll reports. Some payroll providers are able to pull together all that information for your Table 1 and Table 2. So if they can do that, that's great. Kind of saves you some time there. If not, then you kind of have to pull together those reports on your own to provide with this. Other items would be tax forms or your payment receipts. And then for your full-time equivalent calculations, make sure that you're providing anything to kind of substantiate how you're coming up with those full-time equivalent amounts. And just a few takeaways. As we mentioned earlier, the biggest driver for your expenses on this forgiveness form is going to be your payroll. So we want to make sure that we're really looking at that and making sure we're capturing all that payroll to get your maximum forgiveness amount. For the Table 1, again, we want to make sure we kind of limit as many employees in that table as possible and get them into that Table 2, so we don't have to worry about the salary or wage reduction calculation. And just make sure you're maintaining all your documentation and support for your payroll costs is felt, as well as those full-time equivalent calculations. And with that, I will pass it on to Todd for any questions that we might have.
Well, thank you, Ethan. We had a couple payroll questions come in, and one of them is, if you have salespeople that get a commission, and on their one commission check, they would be annualized at over $100,000. Do I put them in table 1, or do I exclude them and put them on table 2, even though their total compensation's under 100?
So if it's for any one payroll, so if for that payroll they annualize over that 100,000, then you would move them from that table 1 down to the table 2. So we're just looking at if they have any one payroll that kind of annualizes over that $100,000 threshold.
Thank you, Ethan. There's another question here about whether or not you have to list any employees who left in 2019 on these schedules. I'm assuming since that's outside the covered period, we wouldn't bother listing anybody who left in 2019.
I believe that is correct.
Yeah. So I think there's someone has a question on, they have union and non-union employees. So, but you have to look at everybody. You have to look at all your employees as one homogeneous group. When you're looking at FTEs, you have to put both parts, union and non-union, together for the business that had. So like if your office is non-union and your workers may be out in the field, maybe union, you look at everybody all together. Nice job, Ethan. And we'll follow up now with Mr. Kyle.
All right, so I'm here today to talk to you guys about the simplified and easy forms. Just to kind of lay it out quickly, the plan is to not go to the next slide yet. The plan is to kind of discuss who qualifies for the simplified and easy forms, and then we'll take a look at the forms, and then there's some certifications as well, some of which we talked about briefly already, but we're just going to touch on for those specific forms. I added this picture in here because if you're feeling frustrated or down about the PPP loans, just wanted to make sure that you guys know that you're not alone. So first, who can use the simplified form? If your PPP loan was less than $50,000, you are able to use the simplified form for forgiveness. There is an exception to that. If together with the affiliates that you included on your initial loan application is greater than $2 million, you are unable to use the simplified form. And this actually came up not as a result of government legislation, but through the SBA using some de minimis authority, and it ends up covering about 3.5 million loans totaling almost $62 billion. So a good chunk of the total PPP loans gifted out from the government. And the reason why is they figured most people who had loans of this size had minimal employees, and the chances of them catching something in their forgiveness amount was very minimal. So next we're going to look at the form. So Joann showed you page 1 earlier. You'll notice it is very similar. And it's very simplified, right? Like the title says. The only real difference is the forgiveness amount. So that's the total of all your expenses that are qualified in this bottom section right here. I'm going to point that out real quick. After you fill that out, the certifications, the items to note once you're filing this, what you're saying in your initialing is basically that all funds were used for eligible costs. So whether it's payroll taxes, etc., whether it's mortgage interest, utilities, rent, you use those that money for all those costs. Payroll costs were at least 60% of the forgiveness amount. Owner payroll on an individual basis did not exceed the thresholds that Ethan already discussed, but the 15,000 and the 20,000 for the 8 and 24 week period. and you're required to provide documentation to the lender. We touched on this a little bit before already, but proving that your expenses existed prior to February 15th of the current year, and proving that the expenses did incur during the covered period that you are applying for forgiveness for. Next, we're going to take a look at the EZ form. So the EZ form is shorter because the certifications or the sign-offs that you complete at the end of the application make all the payroll and FTE information go away. All right, so basically it's page 1 of the previous form that we touched base on, and you don't have to fill out any of the additional payroll stuff. So it's much more efficient and it's a lot less work. And if you do qualify, which we'll touch on the qualifications, this would make your life easier for sure. And basically with those certifications, what you're saying is you're stating that I did not cheat. I spent all the money on the appropriate expenses. And then if the bank has any questions, you can follow up with me later. So you might be asking who can use the EZ form. You need to meet one of 3 criteria. So the first one is if you are a self-employed individual, independent contractor, or a sole proprietor with 0 employees, you are able to use this form for forgiveness. The second is if you did not reduce payroll of any employee by more than 25%, and you did not reduce the number of average paid hours, average paid hours to your employees, you can use the EZ form. And the third option is you did not reduce payroll by more than 25% of any employee, and you were unable to operate during your covered period at the same level as prior to February 15th of the current year due to any government restrictions. So those are your 3 criteria if you want to file this form for forgiveness. So I included a snip here of what the form looks like. There is a section above that looks extremely similar to the S form, and that just includes your company information and your PPP information, but I figured I didn't need to include that for you to see, and this is easier to see this way. So what you'll need to include is you'll need to include your payroll information, how often do you process payroll, and then the period that you decided to choose, whether it's the covered or the alternative. And then you'll notice here line 1 through line 4, that's where you're going to enter in the appropriate expense amounts for payroll, mortgage interest, rent or lease payments, and utility payments. Line 5 is going to take the total of all those. Line 6 is your PPP loan amount. And then line 7 is your 60% payroll. So you're going to take line 1 and divide it by 0.6. So more often than not, this is going to be the highest value of lines 5 through line 7. And then line 8, you're going to take the smallest amount of lines 5 through line 7. More often than not, that's going to be your PPP loan amount total, because line 5, you probably, I would think, incurred more expenses in that period than your PPP loan amount covered. And line 7, like we just discussed, is probably going to be the highest. So more often than not, your PPP loan amount is going to be your forgiveness amount. Items to note when filing are the certifications that you're going to have to sign off on. Very similar to the simplified version. You're saying that you're signing all funds were used for eligible costs. Payroll costs were at least 60% of the forgiveness amount. You'd even do a calculation on the form for that. Owner payroll did not exceed the thresholds that we touched on already, the $15,000 for the 8-week period and the $20,000 on the 24-week period. And note that is on a per individual, per owner basis. And you are required to submit the documentation that we've touched on before. Again, proving the expenses were there prior to February 15th, and then proving the expenses during the period that you chose. There are a couple more on here, and this just goes back to what we touched on before of who is allowed to file this. So you will have to sign off that you did not reduce the number of employees or average paid hours. We touched on before that sole proprietors or people with 0 employees are able to file this. You'll check this box right here because you didn't fire yourself, right? There are some exceptions to the rule. We touched on this a little bit before. Ethan talked about this. If you are unable to hire or rehire those who were employed by February 15th, or someone who is similarly qualified or if you cut hours and tried to restore them, but they said no. Those are a couple of examples of exceptions to that rule. And then the other option is if the borrower was unable to operate this at the same level as prior to the covered period due to government restrictions. So this is like, for example, if the CDC said that you were, you needed to close down for X reason, all right, then you qualify there. Big takeaways from the S and EZ forms. So the bank is going to examine the math on the forms and compare that to the support that you've given. So if the expenses that you listed tie out to the support, life is going to be very easy and you're going to hear a response in the most efficient manner. They're not there to audit the numbers, but what they are is to basically check your application. So with that said, I'm going to pass it back to Todd to see if any questions came in, and he also has a couple remaining slides here.
Well, thanks, Kyle. You did a nice job. If you kind of compare overall the three forms, so the S form, what you get there is the difference between the S and the EZ form. Rather than, you don't have to fill out the individual separate categories of expenses. You just say, I spent the money. But if you had a reduction in full-time employees, or if you had a reduction in compensation for someone who makes under $100,000, you don't have to worry about it. Will not impact your application. That's really where what the S form does. The EZ form just said that I didn't have an overall reduction in employees. My FTE stayed solid. I didn't reduce the earnings of my people that earned under $100,000 by more than 25%, or that you fit for one of the other exceptions. It's expected that over 90% of all loans will be eligible to use either the S or EZ form. So please keep that in mind, that those are important. Everything that these people have told you, and is accurate there, that there's a lot of details on FTEs if you did have a reduction. But for most people that were able to maintain their employment levels overall above the reference period, which for most people, they're going to use January and February of 2020. If your employment is, your FTEs are above that level, you'll be able to use these shorter forms and make life a lot easier for you. So I'm going to talk about a couple things that are still out there. So there's a possibility that you may have easier forgiveness on applications with less than $150,000. So keep in mind, as Kyle said, that the $50,000 came from the IRS, the SBA using de minimis authority. They said, if we allow these to be easy applications, we're not worried about the changes in FTEs, we're not worried about the reduction in compensation. It's really not that big a deal as far as the program overall, because we didn't have legislation. Now that the elections are getting behind us, they might actually get back to doing the business of and dealing with some of these issues. And one of the things, there is bipartisan support to make life easier for people with smaller loans. Stay tuned. There also may be additional loans for small businesses that have a reduction in revenue. So the thing of the, or if you ran a restaurant or a gym or a tattoo parlor, you weren't doing, you weren't able to stay open over that period of time. Maybe you haven't been able to get open consistently now. So those type of people are maybe additional help for, because not all the PPP funds that were authorized have been dispersed. And there actually is some other things that they were talking about doing now that election season is over. Maybe some of that stuff might actually happen. There is a, and one of the big things that we're interested in is when the CARES Act was passed. That's the act that will authorize PPP loans. They made it clear that the income forgiveness of the loan is not taxable. It's explicit in the statute. The Congress really thought that wouldn't mean that you could deduct the expenses, but the IRS pointed out, wait a minute, we have another competing code section that says it's not. And they put Congress on notice that if you want those expenses to be deductible, you need to change the statute. Maybe now that they're not running, they might actually take care of those issues and get the law back to where they want. Stay tuned. We'll see how things go. So if we can move to the next slide, that would be nice. Thank you. But what a lot of you are wondering about, what should I do? Should I apply for forgiveness now? Here are my general rules of thumb. You have plenty of time to take care of forgiveness. But what I'm suggesting is, if your business did not have a reduction in revenue of over $30,000 in a quarter, I'm comfortable with you applying for forgiveness whenever your covered period is done. If you want to wait till 2021, that's fine. If you want to file now, that's fine. If you have a larger reduction in revenue, I want you to wait. And the reason is there might be an additional opportunity for you to get a PPP loan. And if you remember the application process, everyone was allowed just one application. But as the rules kept going through, sometimes it expanded the amount of dollars you could get. So if you applied later, you would have got a higher loan than if you applied earlier. Those that already applied once, when the rules changed, they were only allowed one application for the loan and they could not get the extra funding. What I want to make sure is that there's only one. I don't want them to say that there's only one opportunity for forgiveness, so that if you applied for forgiveness today and you're eligible for one of these additional loans that may be coming hopefully sooner than later, would you be able to get those forgiven if you wait and apply for all forgiveness at one time? I don't know, because I haven't seen the legislation. I'm hoping that's not the case, but to help eliminate that issue, I would suggest if you had a reduction in revenue, and I'm saying 30%, a lot of people I'm hearing thinking they might use a 50% reduction in any one quarter because it tied into the Family First Act, which is the precursor of CARES. You may just want to wait. That's my suggestion. And so the query is, when is a loan forgiven? So from the banking perspective, the loan is forgiven when the SBA repays it, right? That's very clear. But from a financial statement perspective, it is different and there isn't clear guidance. You know, do you look at it that it was never a loan, it was a grant? Do you look at it that you can record the forgiveness when the bank makes the forgiveness decision and sends the application to be reimbursed to the SBA? Or do I have to wait until the SBA pays back? Or do I have to wait until the 6-year potential review period ends? Well, I don't think anyone really follows 6, and very few people are looking the 6 years, and very few people look at the first. There's a lot of art in that 60 to 90 day thresholds. So what we want to do is work with whomever you're working with to make sure that if you want forgiveness on your financial statements this year, make sure you reach out and talk to people earlier to make sure we're all on the same page and know what can and cannot be done. It's important to work in tandem. That those 60 and 90 day periods look like 150 days, but realistically things are moving quicker. So we might be able to get things, you may be able to get things done faster. In the last couple of weeks, we're starting to see things actually start moving from the SBA, from our clients and from the bankers we've been talking to. So that's really good to hear. One thing that's not on the slide because it is not finalized yet, but the drafts are out there, is if you are in the group of people that have a more than $2 million loan, there is an additional form that will be required. You don't submit it with your application. That's why it's not on these slides too. But it'll be a follow-up from the SBA. If you happen to be in that group of people that have a more than $2 million loan, please contact us. We can send you the draft of where it is today. So you can start gathering that data, start putting, there's 2 essay questions on there to make sure you can start putting together your essay in the best light to show why these loans were necessary for you. And so here's really the takeaway summaries of what we've got here. Don't worry about the funds overall. Most loans should be forgiven. FTEs are not as important because of the way the math works and because of the extended period. Tracing, something that we talked about earlier on, it's not as critical. We thought it was going to be, but the applications have nothing about specific tracing. Make sure you got some money left for taxes. There might be later legislation. State impacts are probably going to be different. Right now in Minnesota, the forgiveness itself will be taxable without future legislation. And that banks are not looking at a detailed review. The SBA might have more scrutiny for loans over 2 million, but the bank itself is not looking at a detailed review. So there are a few questions here. Kind of get as many through here as we can here. If the payroll costs are enough to cover the loan, can we just skip the non-payroll section? Absolutely. We were concerned about that, but that is a specific thing the SBA put out. So, and you also don't have to list the payroll for the entire covered period. You can list just enough weeks to get you more than the loan itself. Your covered period doesn't change on the application. Make sure your covered period doesn't change, but the amount of expenses you list doesn't. When you're looking at a question about, you don't have to put the entire Social Security number of your employees on the form. You just show the last 4, which is good. Someone wants to know if we'll post the slides. We'd be happy to post the slides. We talked about the sales commissions. You don't have to worry about people who left. If employees are hired after the covered period, does that help offset the FTE reduction issue? In a way, so what you're going to look at is if you expanded your overall employment, yes, it will help reduce the reduction issue. If they replace someone that that left, if that person who left was in that "it's not my fault you're not here" category, that is, they left to take another job elsewhere, then here's your replacement for that person. What happens is the new person is your FTE for the old one, but in that in-between time, you do have a safe harbor for that in-between time. It does get a little bit complicated. You don't have to, we don't have to list any 2019 numbers on those tables. And that is correct, because remember what you're showing here is the expenses for the covered period. There's that reference period that you look back for FTEs, right? There's a reference period that's just for ratio testing. You don't have to list all that data there. Let's see, with the owner period limit that it did not exceed the amount during the period, does that mean you actually did not pay the owner more than that? So the way the owner payroll works is it's a lesser of number, okay? What you're allowed is the lesser of what was paid in the covered period. You're allowed the lesser, or if you're using the 24 weeks, 20,833, which is 100,000 for 2.5 months, or the $15,000 number, which is based upon 8 weeks at 100,000, or the prorated portion of 2019. Be it 2.5 months or 8 weeks. So it's a lesser of, they don't want you to give yourself a raise in the, just to use up PPP monies. That's the reason you look back to 2019. And they don't want you to use more than the actual proration that anyone else is allowed. I've had a couple clients say, Todd, that the owner issues are so complicated. What about if I just omit them from the form? And I said, that's fine. Just make sure you have enough overall expenses to show that it works. So you will, you don't have to list every eligible expense. Can I use the easy form if I did not reduce the hourly wage of an employee, but had to reduce the hours? Okay, so the person is asking is a restaurant. So there, what you're going to have to look at is you're allowed some relief because of the COVID rules. Okay, you would, the hourly wage doesn't, so that doesn't, you didn't reduce their wage, but you did reduce the full-time equivalents. So you're going to have to look to the COVID exception, and you should work out for there. But the problem is, obviously, you may not have enough payroll because you didn't have enough employees. It's unfortunately. Oh, when I talked about the 30% reduction in revenue compared to what, compared to 2019 levels. Well, the tests right now they're looking at is looking at quarterly amounts based upon the prior year's quarter. Then there are some other grants that are out there. So the Dakota County grants will not reduce forgivable amount of PPP, correct? And that is correct. So other programs that are out there will not reduce your PPP funds. And I think the reason this person asked this, why this point is, if you did get an idle loan, the economic impact disaster loan, if you got an idle advance, those $10,000 amounts, if you got that, that will reduce your forgiveness right now as the statute reads today. So if you did have a $10,000 idle advance, your forgiveness will be your total loan minus $10,000. You end up with a $10,000 loan. You can pay that over over the period of your loan, or you can just pay it off. But the other grants, other programs are totally separate from PPP. Won't impact your PPP forgiveness. Well, I can see we're up to about time, and you're a lot of good things going through here. I really appreciate these people that give me a hand today in making things great. But to continue things going great forward, we have some other things going forward. So one of the things, one of my partners, Kyla, she'll be talking about how to ensure a smooth business sale. And even if you're not looking to sell your business right now, the time to look to get things together to sell your business is before you want to sell it. So please listen to Kyla. She's a great person there. You get to hear my dulcet tones again when we talk about year-end tax planning. We're going to look at that in December, just to give people a few ideas of what to look at and what they should plan on. Little bit changes that might be happening here with the Congress getting back. We'll have to see, but how life goes. Thank you for your attention, and look forward to hearing from you. Have a great day.